To matters financial and geopolitical from a frontier, I trust the week's gone well. Haven't had any meetings, so I've decided to go casual, but I beg your forbearance. This is a chart of the Dow Jones. Seasonality would mean that we should see some kind of rebound into year-end. Bitcoin, last I checked, 5,540. As I said at the beginning of the year, I'm no longer bullish Bitcoin. In fact, I'm bearish, and I've been bearish all year. 27th of November, admittedly, before that big spike, I was talking about taking profits off the table because it had been my recommended trade in 2017. I was quoting Pynchon and his parabola, and also T.S. Eliot and the hollow men, between the idea and the reality, between the motion and the act, falls the shadow, for thine is the kingdom. And then I was quoting the South Sea Bubble prospectus. There are many cryptocurrency schemes which are sold on the same grounds as the great South Sea Bubble prospectus, for carrying on an undertaking of great advantage, but nobody knows what it is. Currency markets, let's get to that. Euro dollar 113.45, dollar index 96.98, Japanese yen 113.33, the Swissy 100.63, pound 128.02, Australian dollar 0.7281. The Aussie and the Kiwi have really outperformed in the last couple of weeks, and I think that's on the basis of some kind of settlement with China. It's not going to happen. It's a big sell. Maybe you get 73, but we're definitely going back down in my view. South Korean won 1129.59, the rial 378.42, Egyptian pound 17.9060, and the rand firming up 14.1809. Dollar index, this is a 3-month chart. My target remains 100. Euro dollar, this is a 3-month chart. I'm looking for 106 and then parity. Going back to the point about the Aussie and the Kiwi, China proxies offer hope amid market mayhem. The currencies of Australia and New Zealand is showing a surprising amount of strength, appreciating 3.45% and 5.91% respectively over the past month. The so-called Aussie and Kiwi are important to watch because of their economic ties to China. I think the market's gotten way too optimistic. Commodity markets, gold last at 1214.75. We remain in this very wide range, which is 1185 to 1242. WTI crude oil, $56.92. We were above $76 not too long ago. Very interesting article in CNBC, duped, tricked and snookered. Oil analysts say Trump fooled the Saudis into tanking crude prices. Earlier this year, Saudi Arabia pulled off a challenging U-turn in global oil market policy, convincing a fractious group of 24 nations to hike output and undercut the oil market rally that was filling their coffers. The Saudis undertook this unpopular task, at least in part to help its allies in the White House, and for its troubles, the kingdom was rewarded with a series of blistering tweets from President Trump, the biggest pullback in oil prices since the historic downturn of 2014. Oil market analysts say it now appears that Trump hoodwinked Saudi Arabia, fooling the US ally into pushing the oil market into oversupply, and sparking a roughly 25% drop in crude prices. That accomplished Trump's goal of driving down energy costs for Americans, but left oil-dependent nations like Saudi Arabia with the prospect of shrinking revenues. I wrote about this slightly different tangent over the weekend. Crude oil, a Crown Prince plays his get-out-of-jail card in the US midterms. And in that, I was saying I saw the slump in the oil price as a response by the Crown Prince to try and ease the pressure cooker post the Istanbul events. But I mean, he might well have been selling futures as well, so he might have made it neutral for himself, but that we don't know. Emerging markets, Upper Creek conflict in the Gulf is hurting Dubai. Dubai is unlike most of the Gulf's sheikdoms. its economy thrives not on oil but on tourism, trade and finance. The Emirates' GDP is projected to grow by 3.3% in 2018, up from 2.8% last year. Dubai's stock market has slumped by 20% year on year and is the worst performer in the Middle East. Falling rents make Dubai's property market the world's second worst performer in 2017. Shares in Emaar, the Emirates' biggest developer, have sunk by 38% in a year. Dubai is moored to the bellicose policies of Mohammed bin Zayed, the Crown Prince of Abu Dhabi and the de facto ruler of the UAE. He and Mohammed bin Salman, the Crown Prince of Saudi Arabia, have not only led the war in Yemen, but also a 17-month-old blockade of Qatar. As a result, Dubai lost a trading partner. Flights connecting the busy port in Doha to Dubai have been grounded. Qatar's imports, once routed through Jebel Ali, now go direct or via Oman. Rather than share the business generated by Qatar's hosting of the World Cup in 2022, the UAE is trying to scuttle the tournament. Dubai's profitable relationship with Iran has been similarly disrupted. As the UAE becomes more entangled in the region's political fights, so does Dubai. The Emirate long benefited from the region's distress. Now it risks becoming a victim of it. A very good article, actually. In February 2014, I was writing about how Dubai is the real transit state, a connection point of an interconnected century.